Welcome back, everybody, to another episode of the Wisconsin Investor Podcast. And today I have somewhat of a celebrity here who I'm going to introduce in a minute. But like usual, I've been doing a little commercial lately for Wisconsin Discount Properties, who sponsors the show. Today, what I'm going to focus on is not a specific deal, but just on all of the things that we can do at Wisconsin Discount Properties to help you if you're looking to get started in investing in Wisconsin, or you already are in Wisconsin and you're just looking to get that next deal or maybe get your first deal. Our team at Wisconsin Discount Properties is here to help you guys. So what you can do if you're not quite ready to start looking at deals yet, but you just want to start getting your footwork or your feet underneath you, go to wisconsindiscountproperties.com, and instead of putting your information in on the front page, just go to the contact us page if you just want to have a conversation and see if investing in Wisconsin or getting on our buyers list is the right fit for you. But if you do think that's the right fit and you're ready to start getting deals sent to you every single day, go to the website and put your information on the front page, and you'll start getting an email from us every single week, Monday mornings at 6 a.m. with some hot deals for the week that are off market. The only place you can get them is through our buyers list. With that, let's get into today's episode because we got a lot to cover in a short period of time. I have my good buddy here, Mr. Jay Connor. Jay, what's going on, brother?
Hello, Corey. I'm so excited to be here with you on your show to talk about my most favorite topic, that being private money. I'm
Oh,
so
me too,
passionate
man.
about private money. Why in the world is that? Because private money has had more of an impact on our real estate investing business than any other strategy that we've used ever since 2003.
Woo! Well, and for the audience here who doesn't know who Jay Connor is, Jay and I met back in 2008. He was speaking at, or 18. I'm sorry, he was speaking at an event that I was attending as one of the keynote speakers there, and I got to network with Jay and get to connect with him. Then we ended up being in some mastermind groups together, and we've gotten to know Jay for quite a while. And you can tell this fella has a lot of energy and has quite the Wisconsin accent. Jay, where are you? What part of Wisconsin are you in right now that we're doing this from?
The Wisconsin accent. I've never been accused of having a Wisconsin accent. Yes. So my wife Carol Joy and I, we live here in eastern North Carolina at the southern tip of the Outer Banks in a very, very small town called Morehead City, North Carolina, population 8,000. And yeah, our total target market is only 50,000 people.
Wow.
So we don't do that many deals. We'll do 2 to 3 deals a month. We don't wholesale. We stay in all the deals. We flip most of them.
Okay.
And but our average profits now are $86,000 per deal, and I don't say that to brag at all.
Mm.
I say that to make a point, and that is there's an argument to be made to invest in smaller areas, outlying areas, to where you don't have all that competition with all the other real estate investors.
Yeah.
And so, it works out. I mean, run the numbers, 2 or 3 deals a month at 86 grand. That math sort of seems to
That
work out. But
maths
yeah,
that maths nicely.
we're in a small area here, and I just much rather be a big fish in a small pond.
Yeah. Well, that's great because that relates really well to Wisconsin. We have a lot of small ponds in Wisconsin. We're talking a bar and a church and a stop sign, maybe if you're lucky. So I love what you're talking about because I think that's an untapped area here for our listeners is they think they got to be in what we call the big cities, which, comparatively speaking are still relatively small. But there's a lot of money to be made in those outlier areas where you don't have everybody fighting over everything, right?
Absolutely.
That's awesome. The real reason I really thought of you, Jay, is I have conversations every day with investors who are looking to get started in real estate or have already been started in real estate, maybe. And one of the things I preach all the time is the two most productive things I think people can do in real estate investing is find deals and find money. And if they just keep doing those two things, obviously you got to build a little team if you're flipping and those kinds of things, right? That also takes time. But if you do those two things, doesn't matter how bad of it or how good of a team you have, if you buy it, right, you can afford a lot of mistakes, right, for your bad team. But you are inevitably known throughout the industry, throughout the country, as the leading expert in how to find private money. Can you just talk to the audience a little bit about like what the heck is private money? I think most of us understand it, but in your definition, what is private money and why the heck is this such a great tool? Why are you so passionate about private money?
Sure. Well, one of the easiest ways to start explaining what private money is to talk about what private money is not.
I like
So,
that.
when I talk private money, I'm not talking hard money.
Yep.
Now, I'm not poo pooing hard money lenders. Some of my best friends on the planet are hard money lenders. In fact, they use my techniques to raise money not for their deals, but for their hard money lending fund
Exactly. Yep.
that they then turn around and lend out to real estate investors. So, and the reason it's so important to talk about the distinction between private money and hard money is because I mean, there's a hard money industry thing going on right now to where hard money lenders, a lot of them are calling themselves private money lenders. And they, they are lending out private money, but it's
Hmm.
not their money.
Right.
Most of the time, a hard money lender is a middle person or a
Hmm.
brokerage that has raised private money from individuals to invest in their private lending fund, and then the hard money lender will in turn loan that out. So that's hard money lending. When I talk private money, I'm talking about doing business with individuals, human beings, just like you and me, that loan money out to us real estate investors, either from their just liquid investment capital and or their retirement funds. Now that's huge right there. I've
Yeah.
got 47 private lenders right now funding our real estate deals. And by the way, if you're listening to this show, you don't need 47 private lenders. You just need like one or
Well,
two
I was just
to
gonna say,
start.
you only one or two could recycle their money over and over again,
Yeah,
right?
and that's a good thing about private money. You get to use it over and
Hmm.
over and over again,
Hmm.
never with any origination fees, etc. So yes, we're doing business with individuals, and the reason I say retirement funds are so important is, you know, not one of my private lenders, my 47 private lenders, ever heard of private money or the opportunity to be a private money lender until what did I do? I put on my teacher
Oh,
hat.
I love it. For you guys listening, you can't see this. You got to go to YouTube. He's got private money teacher hat he just put on. I love it.
Yeah. So I put on my teacher hat and I teach people what private money is, what it's all about. So, one big distinction between borrowing institutional money and using private lender money when you've taught them about the opportunity is that we get to make the rules. When I used to go to the local bank and borrow money for my real estate deals, I had to get on my hands and knees and put my hands underneath my chin and say, please fund my deal. Please fund my deal. And, I'd have to, raise my skirt up so they could look at all my personal assets and pull my credit score and financial statements. None of that exists. None
Mhm.
of that exists in this world of private money,
Yeah.
particularly when you got your teacher hat on and you're exposing this opportunity to people that never heard about this. So we get to make the rules. You see, here's the deal. Here's a writer downer. You as the borrower, the real estate investing borrower, you as the borrower, you're already approved. There's
Right.
no applications.
Yeah.
There's no credit score. There's no financial statement. And you are your own underwriter.
Hmm.
You underwrite your own deals.
Yep.
You set the interest rate. You set the maximum loan to value. You set the length of the note. You set the frequency of payments, all that. And
Yeah.
by the way, if you don't know where to start on putting that together, I got you covered.
Yeah.
I say just duplicate what I offer, just duplicate what I teach. It seems to work pretty good.
Yeah. It's served you well since 2003. I mean, that's over 2 decades that it works. So I think you've proven through every market now, Jay, that this system you have is pretty awesome. And I know at the end of this, you're gonna have a little giveaway for the audience, which we can talk about at the end, correct?
Oh, sure. Yeah. I'm so excited about my new book, which is called Where to Get the Money Now. It's not an ebook, it's an actual book that I'll autograph and I'll mail it to you. And yeah,
Sweet.
here at the end of the show, I'm going to give out a specific URL where you can get the book for free. Just cover shipping, and I'll rush it out to you, 3-day rush delivery through the United States Postal Service.
Sweet. That is awesome. I have the book. Love it. There's so many good nuggets in it, by the way, Jay, that I know we had a mastermind a few years ago that we were running, and we zoomed you in to speak to that audience, and they loved you, and you got the book out to a bunch of them. And I know that made an impact for a lot of those folks as well. But private money to me, I want to go back to this. One of the things, I think it's an untapped thing. Jay, maybe we can expound on some of those techniques they're going to find out in the book, or just talk a little bit about your experience. There's a lot of fear for people around talking to friends, family, their network. Like they feel like they're chasing people. What are some easy things people can do to either reframe that or what have you found to make that less maybe scary for people who want to do this real estate thing and need private money to accomplish it?
Yeah, that's a great question. I hear it all the time.
Hmm.
People that have never raised capital, never raised money, they'll say something along the lines of, or if they don't say it, they're feeling it. They say, I've got a fear of rejection. So I answer that with this question. And the question is, how can you be rejected if you're not asking
Ah,
anybody for anything?
so good.
Right? So I got $8.5 million in private money from my investors that I just use from project to project to project. And you know what's interesting, Corey, is I've never asked anybody for money. I've never
Mm.
asked anybody for money. And they say, Jay, wait a minute. Oh, and by the way, in addition to that, I've never pitched a deal. I've never pitched a deal. And they say, Jay, wait a minute, hold the phone, hold the phone. How do you get all that private money and you never ask anybody for money? And how in the world do you get your deals funded and you never pitch a deal?
Right.
Well, let's
I want
pull
to
the
hear it.
curtain back on that secret
Let's
sauce.
hear it.
So here's a really, really important point
Okay.
to first understand this. I talked about my teacher hat.
Yep.
First, you want to have an attitude that you're leading with a servant's heart and you're teaching people about this opportunity in this world of private money. So, one big secret here to getting your deals funded without ever asking, never pitching, is we separate, this is critical,
Okay.
separate the conversations with a new potential private lender about the program and then having a deal to fund. Here's a writer downer: desperation has got a smell to it.
Oh yeah, stinky cologne, baby.
Stinky cologne. And
Mm.
if you're talking with a new potential private lender about your opportunity, and in that same conversation, you're talking about a deal that you're looking to get funded, you already sound desperate
Yeah.
without even trying to sound desperate, because what you're communicating when you do that is, I need your money to fund this deal.
Mm.
It's what you're communicating. And guess what? You don't need their money because there's more money out here available than there are deals, quite
Right.
frankly.
Yeah.
Right? So, first, what we want to do, since we're going to separate the conversations, is you're going to teach people, and I suggest starting in your own warm market, your own connections, your own network, people in your cell phone, people you go to church with, people you play golf with,
Hmm.
etc. Start with that. And in my book, Where to Get the Money Now, that I'll mail to you, I actually have you go through an exercise on how to make your initial list
Love that.
of people to contact. And by the way, this does not have to all be one on one. I mean, I've raised $969,000 in new private money at one hour luncheon.
Oh
They call it the private lender luncheon.
yeah.
So back to, how do you get this money without asking for it? So first you teach,
Okay.
you expose them to the program. And by the way, if they're listening to your program on private money, they're interested,
Right.
or they wouldn't be listening. They
Mm,
wouldn't be
right.
listening, right?
Exactly.
And so first you teach it, and they tell you verbally how much they've got to work with. Is it investment capital? Is it retirement funds? You now need to introduce them to your self-directed IRA company representative, to where they can move their money over with no tax effect and earn either tax deferred or tax free income using their
Hmm.
retirement funds. So they tell you what they've got, where it's located. And now, Corey, I'm going to share with you and your audience right now the exact script,
Ooh, come on, baby.
the exact words to use when you've got a deal for your private lender to fund. And this script that I'm going to share right now, exactly what to say
Let's
when
go.
you got a deal for them to fund, and you are not pitching, you're not asking.
So I
So,
wait real quick just to make the point. So you've already educated them on what private money is. You know how
yep.
much they have. You know where it's potentially coming from. Right now, are we letting the dust settle here, and then we're coming
Yeah,
back?
because
Okay.
Corey, let's say that you are a new private lender
Yep.
with me.
Yep.
And let's say that I've taught you the program, the opportunity, the interest rate, which is 8%, by the way.
Okay.
There's no points. There's no origination fees. The length of the note is going to be 2 years.
Okay.
The maximum loan to value is 75% of the after repaired value, which, by
Mhm.
the way, side note, that's one of the 20 reasons I love private money is I always bring home a big check when I buy the property. Who
Yeah.
wants to get paid to buy properties? I never take any of my own money to the closing table in this
So
world of
awesome.
private money.
I love
And
that.
so anyway, so let's assume I've taught you the program, you love the program, and let's say hypothetically that you have told me that you've got $150,000 in a, let's say it's in Charles Schwab
Sure.
in the stock market, dedicated retirement funds, and you're sick and tired of the volatility, let's say,
Yep.
and you want a set rate, reliable return, 8%. You're happy with that. You're excited about that. So I've introduced you to my self-directed IRA company that I recommend my private lenders to use. And let's say you've moved that $150,000 from your retirement account over to the self-directed IRA company. And that took a couple of weeks to get that in place. And so now you've contacted me and you say, Jay, I got the money there ready to go. And I've said, okay, Corey. And here's exactly what I say. I say, Corey, I'm going to put your money to work for you just as soon as possible, probably within the next couple of weeks or so. And you say, great. So a couple of weeks go by, I dial you up, you answer the phone, which, by the way, I know people find this hard to believe. I actually still have a handset and a
Oh, look at
landline with a
that.
cord here in
Look
North
at
Carolina. Anyway,
that.
so
Wow.
I call you up, you answer the phone, we have a little chit chat. I'm going to share the exact script right now that I
Yes.
would say to Corey. That's he's got $150,000 to put to work. He's waiting. This is what I call the good news phone call.
Okay.
This is the good news
Let's
phone
hear it.
call.
Let's hear it.
So I dial up Corey. Corey answers the phone. We have a little chit chat, and here's the script. Corey, I got great news for you. I can now put your money to work. I've got a house under contract in Newport with an after repaired value of $200,000. Now, the funding required for the deal matches up to what you've got in your self-directed IRA. It's $150,000 is what's required for the deal. Now, closing's going to be next Wednesday, next week. I'm going to have my real estate attorney email you the wiring instructions. So you'll need to have your $150,000 wired to my real estate attorney's trust account by next Tuesday.
Mm.
That's it.
That's it.
That's
It's
it.
more or less just telling them what to do. They got the
that's
money. They
it.
want to put it to work. Let's get it
So
to work.
so let's unpack that.
Sure.
Let's unpack that as to why that's the way it works.
Yep.
First of all, my private lender knows I'm not going to bring a deal to the conversation that does not meet the criteria of the program I already taught them.
Right.
I'm not going to have them fund a deal that is more than 75% of the after repaired value. They know that I'm going to be I'm going to be collateralizing the note with a deed of trust. Most people call it a mortgage here in North Carolina and some other states, Texas, it's a deed of trust. They know I'm going to collateralize the note. So when I call up and I say I got an after repaired value of 200,000, the funding requires 150. There's your 75% of the after repaired value. So they know that I'm not going to bring a deal for them to fund that doesn't meet the criteria of the program. And secondly, for goodness sakes, in the example we just went over, Corey, whoever the private lender is not earning any money until I put their money to work.
Mm-hmm.
And let's unpack it a little bit further. They, for goodness sakes, they moved their retirement funds over to the self-directed IRA company that I recommended. So they've already trusted me. They're already listening to my recommendation. Right. They've moved their money over in hopes and an expectation that I'm going to invest that money just as soon as possible. Because remember, that's what I said to Corey after he moved his money over. I said, I'm going to put your money to work just as soon as possible. So Corey is sitting by the phone waiting for the good news phone call that I'm going to put the money to work. So you see, when we unpack this scenario, There's no chasing, no begging, no persuading, no selling. It's all about serving your private lenders.
Yes. Talk to me real quick, Jay. I want to unpack two things. There's two areas I want to go to real quick. Can you just explain to people in the shortest way what's a self-directed IRA and why is that important? And then number two, I want you to talk about the reasons private money lenders love giving money to us real estate investors.
Sure. So, what is a self directed IRA and why is that so important? So, a self directed IRA company is also called a third party custodian,
Mm.
is also what it's called. But a self directed IRA company is a company that is approved by the IRS to be a custodian of your retirement funds. So a self-directed IRA company, they can't give any financial advice whatsoever. That's why it's called self-directed. So the account holder at the self-directed IRA company totally makes their own decisions about how they're going to invest those retirement funds. And a self-directed IRA company, depending on which company it is, they're going to charge a percentage, a fee for being the custodian. Some of them charge a percentage of your asset value in your account. Some of them charge just a flat fee per transaction that you do,
Yep.
which, by the way, I prefer that way.
Yeah, that's what we
And
have.
so it's a great way for your retirement funds, for a private lender's retirement funds, to grow either tax deferred or tax free. It's going to grow tax deferred unless it's in a Roth IRA, and that is after tax dollars that are invested in the IRA. So all that income is tax free.
Which you can do a lot of damage in your retirement accounts in real estate, but also just growing it with you at 8% tax free is pretty incredible. Why can't they just take their Charles Schwab account and do it?
I'm
Jay?
sorry.
Why can't they just use their Charles Schwab account and invest?
Yes, that's
money?
a great question. So the reason they can't use Charles Schwab or any brokerage, Edward D. Jones, um, Morgan Stanley, any of those, they can't use that money to self-direct because when they have their retirement funds at those brokerages, they can only invest in what the brokerage offers, right? And in addition to that, there's no commissions, there's no fees for the financial advisor if they were to use those funds to invest in our deals. So they got to, if they want to do this, they got to move it over to a self-directed IRA company.
Yeah, I think that's important for people to know because I know like self-directed. When I first got into this, I'm like, what is a self-directed IRA? I had no idea, and I'm like, I had this exact question when I was starting. I'm like, well, why can't they just take their retirement account from Charles Schwab and just let me go use it? So I appreciate you answering that for the audience because I'm sure there's a lot of people out there.
Now, your other question was, why do private lenders want to do business with us? Well, there's three big reasons why private lenders want to do business with us. Number one reason, they're going to make a lot of money. Well, a lot of money compared to what? Compared to what? They're going to make a lot of money compared to putting their money in a certificate of deposit at the local bank. By the way, those rates are coming down fast.
Oh yeah.
A year ago, you could have gotten 5% in a 7-month CD here at the local bank. Today, you're down to about 3%.
Wow, it's down 2% already.
CD, yeah.
Oof. That's
and
crazy.
going to come down even. I mean, and if you put it in like an 18-month CD, it's even a much lower rate because they're anticipating rates coming down.
Got it.
You see.
Yeah.
So, number one, they're going to make a whole lot more money. So I've been paying my private lenders ever since 2009. The first 6 years, I actually, Corey, used local banks. I didn't know any better.
Okay.
So from 2003 to January 2009, I just used the local bank to fund my deals until they cut me off with the rest of the world.
Yeah.
Right?
Yeah.
So that was the biggest blessing in disguise. So why do private lenders want to do business with us? They're going to make it. I mean, 8% is fantastic. By the way, I've been paying my private lenders the same 8% since 2009, and here we are in 2025. And one question I get is, Jay, how in the world are you still paying 8% when the market's going way up on interest rates and all that? How do you do that? Well, there's two answers. Number one, because I make the rules,
Mm,
right? That
yeah.
remember that's what's different. In this world of private money, we are our own underwriter instead of the lender making the rules, which is traditional. We make the rules.
Right.
We're offering this opportunity. The other reason they are ecstatic with 8% is that's more than 5%, and it's for sure a whole lot more than 3%. And when right before COVID came along in 2020,
Yeah.
the average 12-month CD in the nation got down to 0.17%.
Wow. Wow.
Now, you're like a hero then when you're paying
Oh my
8%.
goodness. Yeah. I know it was a little bit tougher in the last couple of years because like the treasuries were high and all this, bonds and all that stuff were pretty comparable to getting up there anyway, closer to the 8% mark. So the delta between what you can offer, right, and what the treasuries could give you was a lot closer than it has been in a long time. So that
Yes.
made it a little more difficult, I'm sure, for some folks out there. That's what happened to us when we were raising a lot of money for flips. When we shifted, when rates went up, we started flipping a lot more than we wholesaled, and that was a big conversation piece I would have with people all the time. It's like, well, I can get 5.5 or 6 over here, give it to you for 8. So I had to go up to 10% for some of those folks to get them to, make the move. But now, as you're saying, it's coming down a lot, and you're just steady Eddie at 8. They know they're getting 8. They like the consistency. They don't have the volatility, right? They know they're going to just consistently get an 8%. Why would they mess with it?
Yeah. So, three big reasons why they want to lend us money. Number one, they're going to make a lot of money.
Yep.
Number two, they know that their investment with us is going to be safe and it's going to be secure.
Mm.
So, how's it safe and secure? Well, it's secure because we're not borrowing unsecured funds. You can borrow, you can just do a promissory note and be legal all day long, but don't do it. Protect your private lenders by collateralizing the note with that mortgage or deed of trust. That gives them the right to foreclose on you if you don't make the payments. And of course, you're going to make the payments because you're going to buy right. It's safe because it is a conservative loan to value.
Mm.
We're not borrowing more than 75% of the after repaired value, so that when that home is renovated, they have what I call a 25% equity cushion between what the value of the property is worth and the total loan to value that we've borrowed. And then the third reason that they love doing business with us is they don't have to worry about the value of their investment being volatile. And when I say that, of course, I'm contrasting that to them putting their money in the stock market. If they invest in the stock market, first of all, they already lost money. There's fees, there's commissions. In this world of private money, there are no fees, there are no commissions. If they, loan or invest $200,000, they know that 8%. If I use it all year, they're going to earn $16,000. So it's like putting money in the bank. They know exactly what the rate of return is going to be. And that's particularly important to older private lenders that
Okay.
don't have enough time to live through another correction in the stock
Mm,
market, if you
sure.
know what I mean.
Oh yeah.
So those three reasons, they make a great return. Secondly, it's safe and secure.
Mhm.
Thirdly, the value is not volatile. The principal loan amount remains the same until we cash out. So when we sell the property, they get all their principal back, unless we substitute the collateral, which we do a lot of. But that's
Okay.
another show.
Well, I was
But
gonna I
anyway,
was gonna get into that, so maybe we'll get into that. But we'll see how much time we have.
okay. But anyway, we pay them all their money back along with any unpaid accrued interest, and of course, they want to reinvest just as soon as possible.
Yes, exactly. One other thing I think, Jay, on the safety security side of things, we put our private, and I'm sure you do the same thing. We put our private lenders on as the mortgage holder on the insurance policy,
Absolutely.
right?
So on the insurance policy, the property and casualty insurance, we name the private lender as the mortgagee.
Mm.
The mortgagee. The reason that's important to them, that's another layer of protection, is if there's ever a claim against that insurance policy, well, the check by the insurance company is going to be made payable to the mortgagee, your private lender,
Mm-mm.
and to your entity. So your private lender's got to sign off on that check before you get the money. And so, again, that's just another layer of protection for them. We also name them on the title policy as an additional insured. So we're giving them all the safety and all the protection as a regular bank would get.
Yeah. Are there any laws, Jay, around like how you can go about raising the money? Like I know like with if you have a fund, right, isn't there certain rules about accreditation and some of those things? Is there anything with what you're doing here where you're using it really per transaction, or like you said, you're going to substitute collateral at times? Is there any kind of laws or anything anybody would need to know if they're going to go out and start soliciting
Yeah. What's
some funds?
wonderful about the way that we do private money is that it's not SEC regulated. So
Okay.
we're not raising money for a fund. If
Okay.
you're raising money for a fund, you're now under the SEC regulatory laws.
Okay.
But everything that we do with single family houses or duplexes, triplexes, quadplexes, a property itself, it's called in slang, it's called one-offs.
Okay.
One-offs. So what in the world is a one-off? Well, a one-off is you've got a single family house that's being funded by a private lender, maybe two, maybe
Mm.
three. You can have multiple private lenders loaning money, and they each have their own promissory note, and they each have their own deed of trust protecting their note as well. But that's when we get into what's called total loan to value. So
Okay.
total loan to value means you add up all of your private lender notes that they are loaning on a property, and you divide the total of the notes by the after repaired value. You still don't want that to exceed more than 75% of the value of the after repaired value of the property.
Okay. So you're saying you can pair a few different lenders together on a deal. Is that what you're saying?
Sure.
But you just
Like,
don't want
for
to get over that
example, the little
75%.
scenario that we went over with you when we started
Mm-hmm.
on that $200,000 after repaired value house,
Yep.
I could get $100,000 from one private lender for the purchase.
Yep.
I could get $50,000 from another private lender for the renovation.
Mm-hmm.
Add that together, you're still at 75% of the after repaired value.
Yep. Now, what about the chain of mortgage? So some people are like, I only want to be first position mortgage holder, right? I won't do anything unless I'm first position. Can you just talk a little bit about what that means
Sure.
in this world and
So the
why that's
reason a
important?
private lender would only want to be in first position is because any junior lien positions, second position, third position, if they had to foreclose, then they have to inherit any liens that are above them. So if a junior lien was foreclosing on me, which by the way that's not going to happen, never
Mhm.
has. But anyway, if they were to foreclose, they're inheriting any senior lien positions. And just to comment on that,
Yes.
the only people that will ever have a problem and insist on only being in first position is if they have already been a private lender in the past. When you've got on your teacher hat and you are teaching people in your own connections, there's a five-letter word that goes a long way that starts with a T, and that's the word trust,
Yeah.
right? So you see, these people are not really investing in your deals.
Right.
They're
They're
not
investing in
investing in
you.
your deals.
Mm-hmm.
They are investing in you,
Mm-hmm.
is what they're doing.
Yes, absolutely. That's the biggest thing in private money, right? The relationship and the trust, right?
That's it.
Yeah. Yep. I had when we were raising a lot of money, I had some folks come up to me and they were like, "Hey, could I get some funds from your private lenders for some of these deals?" And I was like, "Well, no, it doesn't really work that way because they're investing in me. It's not like yes, they want a return on their money, but they don't know you from Adam. So like they're not gonna probably lend you have to go to your own network and get your own
That's right.
people, right? Like it's
And
not as
like,
easy as just sharing
like
like a buyer's list. Like you gotta
yeah, it's like, when I'm teaching and coaching other real estate investors on this world of private money, I say, look, I'm not loaning you money. I'm not connecting you with anybody that loans money. I'm going to teach you how to raise your own money.
yeah, because you have to. It's the one thing. This is where when I teach people about getting started in real estate, this is where grit comes in. This is where how bad do you want this comes in. Is are you willing to go out and raise some private money? Because that's how I got started. My mom was my first private money lender. That's how I got my first deal. Was I went to Ma, you want to get in this deal? Yeah, let's do it. I'll give you 10% or 12% or whatever I offered her at the time. and we did a deal together. And then she's like, she exactly what you said, Jay. I gave her her money back after we refinanced, and she's like, "Well, do you have another deal that we can do this in? Because that was pretty cool. I like getting that kind of money, right?" And then she
That's
ended up,
right.
she still is involved in real estate. She still invests in money in different ways and different deals
Love
and
it.
that kind of stuff. So you're giving people a great opportunity as well. I think that's the other important
Well,
part.
and that's just it. You know, one thing I discovered and my community that follows me discovers is it's all about creating win-win scenarios. And I mean, we've received handwritten thank you notes from our private lenders. One I'm thinking of specifically, Wayne and his wife. They've both passed away now, but they were
Man.
one of our first private lenders years ago. And they gave us a handwritten note thanking Carol Joy and me for changing their retirement years. They told us if we had not told them about this private money world and private money opportunity, they would not have been able to travel and see their
Uh,
grandkids as often as they did.
so awesome.
So, I mean, you know, you as a real estate entrepreneur, you have this opportunity in this world of private money to make an impact and change people's
Mhm.
lives by
100%.
giving them, you know, this opportunity. The only
Yeah.
complaint that I've ever heard from my private lenders are, I wish I'd known about this sooner.
Yeah, exactly. For sure. Last question for you, Jay, because I know you got a wrap here. You got a busy schedule, and we appreciate you taking this time out. This is a question that I actually have. So you put them on a 2-year note, and we talked about substituting collateral. And again, if we got to have you back on to cover this as it's totally separate episode because it's going to be hard to do, we could totally do that. But my concern is always like, hey, what if I don't have a deal for them? Are you doing that and you're still keeping their money and paying them the 8% if you don't have a deal to place it in? Or how are you handling that, or with some of your borrowers or
Yeah,
some of
so
your
first of
lenders?
all, I'm not paying them interest unless that note is being collateralized by a property.
Okay.
So, and then secondly, when I have a new private lender come on, I move them to the top of what I call the queue, like who's
Okay.
the next private lender in line to use their money. So
Okay.
I want to show a new private lender coming on that, hey, I can perform, I can put your money to work. And then the others, it depends on how much money they have to invest.
Okay.
Like my minimum that I accept from a private lender is $50,000. I can't buy a house typically with 50,000, but I
Right.
can I can rehab a lot of houses at the $50,000 mark.
Mm-hmm.
And so it depends on how much they've got to work with. Have I got a new purchase coming up? Well, then I'll need to use one of my private lenders that has, you know, higher
I
amounts of
gotcha.
money. I've got one private lender that's got 1.2 and $1,250,000, just one private lender. I got another one
Mm.
that's got 600,000.
Okay.
I've got many in the $500,000 range, and then I have some that only have 50,000. So depending on the deal that's coming up, will determine okay which private lender's money am I going to use.
Got it. Okay. Very good. And there's a lot more to unpack here, Jay. I know you got to get to some other things in your day. And I know we got a little late start with some Zoom audio things. So next time I'm gonna have you back on. We're gonna keep going. We're gonna do Jay Connor part 2 here. And I think I'm
Oh,
gonna
Jay
pop
Connor 2.0.
2.0, and then I'm going to pop on your show too. So maybe if people want to get over to your show, Jay has a podcast as well where you're talking with people using private money all the time. Jay, do you want to just let the audience know where they can find your show?
Absolutely. So the name of my podcast, and by the way, we just started our 8th year. We're
Woo!
in our 8th year
That's
of our
amazing.
podcast, episode number 717.
I got ways to go to catch it, buddy.
But anyway, the name of the show is Raising Private Money. That's
Awesome.
it.
Easy.
So your favorite platform on listening to podcasts, just type in Raising Private Money. You don't even have to put in with Jay Connor. It'll pop up. And in addition to that, Corey, as we promised at the
Yes.
beginning, I
Let's
want
do
to
it.
give away my book for free. Just covers shipping. It's Where to Get the Money Now. I'll autograph it for you.
Let's
I'll
go, baby.
rush it out, 3-day rush delivery through the United States Postal Service. And here's where you can get the book. Go to www.jayconner.com/book. That's Jay Connor. I'm an ER, not an OR. JAY conner.com/book, and we'll rush where to get the money now right out to you.
I love it, buddy. We'll put a link to that in the show notes, folks. So if you're listening to this and you want to just click the link, you can go to the link and pick up the book there from Jay. And again, this is there's so many good nuggets in that book. There's so many more things that we didn't get to cover today. If you want to hear more from Jay, go check out the podcast as well. There's a lot of great information there. People still tell me, Jay, from 3 years ago, and I think it was 3 or 4 years ago I was on your show, they still hit me up. So you got people all over the country listening to your show too, which is great because they're like, "Oh, Corey, I first heard you on Jay Conner's podcast." I'm like, dang, that was like 3 years ago or something. I don't even remember
Well,
what it was.
we're overdue. It's time to have you back.
Yeah, I'll get back on there. We'll freshen up and a lot more stories, war stories that we can share and hopefully help your audience as well. For those of you guys listening, if you got some value out of this, we say this on most of the shows now. You guys, you could be the spark to change somebody's life here by sharing this episode. You're one conversation away from changing somebody's life, right? Whether they need private money conversation like Jay and I talked about today, they just need to get introduced to this amazing world of real estate investing. You know, I always bring up this family that I interviewed a few episodes ago who they had a conversation with a friend who was doing real estate investing. Boom, 3 years later, they're retired from their jobs and they're homeschooling their kids doing real estate full time. That's the kind of power you guys have by sharing things like this. So appreciate you guys tuning in and listening. And again, Jay, appreciate your time, brother. Always great to see you, and I always love your energy, man. I always take a lot of your energy after these conversations, bro.
That's awesome. Corey, I love your heart, and thank you for having me on your show. God bless you.
God bless you, buddy. We'll see you soon.